The film industry. Home of Hollywood, Bollywood, and a bunch of other words we didn't know existed until now. Vista Group International, a market leader in the cinema technology solutions sector, having a whooping 40% market share globally of businesses that own and operate 20 screens or more. With the world being on lockdown for the better part of 4 months, with cinemas being closed and being one of the last things to be reopened, can Vista Group, a stock that has plunged around 80%, survive this pandemic that has hit the $136 billion film industry like a truck, come out on top? Let's take a look and see how this movie ends.
Hey, what's up guys? Welcome to another video. This video is a very special one as it's Woojin's birthday. And we also crossed 500 subs. So a huge thank you to you all. And a special shout out to this user for suggesting this company. We love all your suggestions, so make sure to keep them coming. But for now, let's get right into it.
So beginning with their product, Vista Group provides software and additional technology solutions across the global film industry in the sectors of distribution, exhibition, and consumer. Vista Group is the parent of 8 different companies and counting. These companies and their products cater to most, if not all, aspects of the production, distribution, and exhibition of films. But let's take a look at their 2 largest segments that make up their revenue, beginning with Movio, the second largest segment, which represents 18% of Vista Group's total revenue. Movio maintains real-time, authoritative data on customer transactions for many of the world's biggest cinema chains, capturing the behavior of over 29 million identifiable moviegoers worldwide. In simple terms, it provides data analytics and insights for cinemas and their marketing teams. Some of these insights include films people go to, what ticket types they buy, how often they go, the time of day, and what the weather was outside, creating individual profiles for targeted marketing. Movio software is built taking into account the latest technology in the big data space. Movio is a SaaS solution, software as a service, meaning that the software is licensed out on a subscription basis and is centrally hosted on the cloud. Another example of a SaaS application is Xero. Vista Group is pushing hard to move fully into a SaaS solution as they currently have a fully dedicated project for this transformation. Moving on to the largest segment, the cinema segment, encompassing the 2 companies Vista Cinema and Veezi, which make up 67% of Vista Group's total revenue. Vista Cinema is the founding business of the group. It is a total cinema management solution for cinema exhibitors that operate more than 20 screens. Vista Cinema will help provide everything from a highly customizable website, mobile application, kiosk integration, all the way to customer loyalty programs, completely reshaping the point of sale experience for the moviegoer and helping the cinema reshape its brand in the market to truly set them apart from competitors. Veezi, a cloud-based SaaS solution. Veezi is a fully configurable cinema management solution similar to Vista Cinema to suit the needs of cinema exhibitors that operate less than 20 screens, or in other words, independent cinemas. Veezi already has customers in more than 40 countries around the world as of May 2019, and the total market opportunity is estimated to be in excess of 20,000 cinema sites. So the cinema segment and the Movio segment make up 85% of Vista Group's revenue in 2019. Vista Group also has joint ventures with Vista China and Stardust, a social app to share video reactions to movies and TV shows.
Movies are one of the industries that have been heavily impacted by the pandemic, with many countries temporarily banning theatre operations, people feeling unsafe to go, and a lot of new movie releases being delayed. Over the course of 1 year, Vista's share has fallen from $5.90 at all-time high to now $1.28. But Vista's share has actually been in a declining trend before the virus. Shortly after hitting $5.90 in July last year, their share price has plunged by almost 40%. This drop was largely due to the fact that growth has decreased significantly to just 11% after 5 consecutive years of 20% plus revenue growth. On top of this, because of the pandemic, Vista is also in the position where they do not know when their customers will be able to reopen in a meaningful way, which has had and continues to have a significant impact in their business. In response to this, Vista has cancelled their planned investments in China, potentially are looking to cut jobs which will save them $12 to $15 million, and have successfully completed a capital raise of $65 million at $1.05 a share. Despite the difficulties, Vista has actually won new businesses during this pandemic, mostly in Europe, by coming up with a number of innovative ways to help cinemas to reopen, which includes Cinema Reopening Kit with social distancing seat capability. Although this is good and well, it really depends how healthy they are currently to survive this difficult time. So if we look at their balance sheet at the end of 2019, they have $44 million of current debt and $77 million of current asset plus the $65 million they have raised. Now, in current assets, accounts receivable is not entirely reliable because some of it could become a bad debt, especially when their customers are struggling to pay. But if the VO assume only 50% would pay, they would have enough money to pay off all their debt, and Vista have announced their liquidity planning for the capital raise assumed a downside scenario where global cinemas would remain closed for the rest of 2020, reopening throughout 2021, but with a slow ramp up. Anything better than that will be a significant benefit. So with their strong balance sheet, it seems likely that they can survive this difficult situation for an extended period of time, especially with movie theaters slowly reopening around the world. So with this 80% decline stock, the key question would be, will their customers come back when they reopen and set Vista back to the path of growth? The answer to this, only time will tell, but these are the words from Vista Group's CEO. We are confident that we have cemented already strong relationships with our customers, and that when they open, they will be relying heavily on our solution and our support to operate in the post-COVID world.
Before we give our conclusion on the stock, make sure to always do your own research first, and this is purely just our opinions.
I think Vista is a great company with many talented people. I especially find it impressive that they have 40% market share globally for cinemas with 20 screens or more. And as someone who really loves going to the movies, I believe that the cinema industry will continue to exist in the future. But with the slowing revenue growth of Vista and the future being a bit more uncertain than what I am comfortable with, if I were to invest, I'd only risk a small portion of my portfolio.
For me, I love all things movies. I go to the movies so much that the cinema upgraded me to a VIP card because I spend too much. So I do like the company and the stock itself. Just like Woojin, I too would spend just a small portion of my portfolio on this. Just based on the fact that they do have a good market share, they are upgrading their products and positioned strongly to survive through COVID-19. To top it all off, the stock has fallen 80%, so for me, it's worth some risk. But I wouldn't expect any returns from this stock for a while. I hope this video was useful to you and helped you gain a better understanding on Vista Group. Do make sure to suggest other companies that you want to see our analysis on. And as always, smash that like button, and if you're new to our channel, make sure to hit that subscribe button too.
And we'll see you next time.